Welcome. In this video, we are going to go over the TradingWolf Oscillators script. To learn more about how you can use these indicators, you can find out more information from our Discord group and documentation on our website. For this video, we will break down each part and explain its features. Down below, you are able to use the chapters if you want to skip to a specific part. First, we are going to discuss the RSI. Now, even if you're new to trading, I'm sure you've probably already heard of the RSI if you're looking into indicators. This is one of the most mainstream and most commonly used indicators throughout trading. However, there are a lot of misconceptions about how you should use the RSI. The most common way, which a lot of new traders will learn, is about when the RSI goes into this overbought area, this is where you should look to sell. When it dips below into the oversold area, this is where you should look to buy. Now, if you did this for trading in stocks, cryptocurrency, you are guaranteed to lose your money. There's been many algorithms written. I've written backtesting strategies myself to test this, and it's one of the most unsuccessful trading strategies there is. So this is the first misconception which a lot of traders get taught. In actual fact, when the RSI gets into this overbought area and oversold area, that's just suggesting that we're in a strong trending market. As you can see here, if you're looking to sell here, this was simply just the first drive up in the market. It then continued to do this 2, 3, 4, 5, and 6, 7, several times over. You'd be heavily underwater if you tried to short any of these, apart from potentially this very last one, but if you're following the trading style, then it's not going to work. Same idea for the downside. You would have entered a long position here. If you bought here, you're obviously heavily underwater again. Now, one simple change you can make to that RSI strategy, which you're commonly taught, is instead of buying as soon as we get into the oversold or overbought areas, you enter the trade on the way out. Now, this is still not a profitable strategy and we don't recommend doing it. However, if it lines up with your confidence, if you have support and resistance from our other indicators, this does actually often prove much more profitable than trying to enter as soon as price goes in. So I'm actually just going to go into the settings and explain what we've done with the RSI. So it's slightly different to traditional RSI, but we didn't want to change it too much because the RSI by itself is very powerful when used properly. Now, first of all, I'm just going to actually start with the settings at the top here. So you have a choice of all these different oscillators. We've tried to build them all into one, so then you don't have to worry about having multiple indicators on your chart. If you want to see any of these particular indicators, you can simply just click this drop down. You also have the option to change what time frame they're on. Now, if you're on a higher time frame, we don't recommend going to a low time frame because it just won't work quite as well as you can see here. It just doesn't work because you can't fit in 15-minute candles into one daily candle. So if I just go up to 4 hours and if I go down to the 15-minute time frame, traders will find this a lot more useful because if you're looking to enter a trade, you often drop down onto lower time frames. However, rather than having to keep switching time frames what you're looking at, you can simply just choose which time frame you want to check out quickly without having to constantly change charts. So if you just select chart, that'll always go onto whatever chart you are looking at. Just going back onto the daily. Another thing we've included is divergent signals for a lot of these indicators. Divergent signals are incredibly powerful and they are very commonly used for profitable trading strategies. If you want to find out more information, you can refer to our documentation or Discord group where we will share how we use our divergent signals to enter trades. There are 4 types, bullish and bearish, as well as hidden divergent signals. You have the option to change what signals are actually given on the chart. So if I just scroll over here, we've made them quite small because we didn't want them to overflow the chart. So you've got these lines where they're actually drawn out, but these signals show when they're actually confirmed. They're not confirmed exactly on the top of the candle because you can't know that this is a pivot high for the divergent signal. So instead we wait 2 candles to confirm that this is the high here. So as I was saying, you can change the actual signals you receive from these, as well as you can change the colors of them. We decided to put hidden divergent signals in a slightly different color just so you can know them on the chart without having to worry about which one's which. Some people tend to ignore hidden divergent signals because they're not as respected. Now that's the basis of divergent signals. There is more information in our documentation, but for now I'm just going to try to skip over that and go more into detail about our actual indicators here. So we have our traditional RSI here. It's got some slight adjustments to it, but this is the basic length of it. Some traders like to make this a lower length. I've seen commonly used a 7 length depending on what time frame you're doing, but traders often like using this for trade signals, divergent signals as well, but we prefer to stick it on 14 still. and the source of it as well. We tend to keep on close. Some people like putting it on high, low, close, free. Once again, that's up to you. We've also included a moving average for the RSI. Now this is simply when the moving average is going up, it trends green. When it's going down, the color goes red. This tends to give you more of an average direction of the trade, and it shows you what's happening with the momentum overall. So even though we're on a daily perspective here, daily time frame, we can see here we had weakening momentum on the RSI as overall. So on this up run, you can sort of see it. We're not just going parabolic up like we were here. This is all weakening and sort of giving you an idea of the trend. And you can see here, this one does actually turn kind of quickly. But you can see that that's quite a lot of strength. Moving average starts trending back up and we get some nice up movement again. But that's just on the 100 length. You can very easily change in the settings here. Some people like having on a very quick length. Once again, I've seen 7 commonly used, and people use the simple crossover as entry ideas, but we don't recommend using that, but it's completely up to you. If you've got a strategy which works for it, then fair enough. So next we have the interest zones. This is one of the most common ways we like using the RSI. It's hugely popular, but basically it's a very simple concept that we're looking at the 50 range for the RSI. So not just the exact 50 point, but the 47 to 53 is what we tend to highlight. You can really say a 45 to 55, depends on the asset, but I think on Bitcoin now it's more well respected, so it doesn't tend to fade too much away from that range. But here we have a strong uptrending asset, Bitcoin here, in the bull run, comes back down, retests the 50. This would have been a great point to enter. Come back down, we consolidate above or around the 50 level before having another move up. Same continues, comes back down to the 50 level, continue. 50 levels, continues. This time we went straight down, breaks down, and actually comes up and sort of hovers around the 50 level, but this is a bearish sort of retest. And this is when the big bear market initially started from 58,000. This is just for Bitcoin, but this does work universally across all assets. You can see here we had a retest of the 50 level, continue down, retest, and more continuation down. But it's a very simple concept. You can change the customization of this if you want it to be more prominent. You can simply go into here, make it a solid color, and it's very obvious when price comes into it. And then we've also got the extreme areas, which you can make a bit more bold if you want. Completely up to you. Once again, we like to try and let the user customize this as much as possible. Now the alert, this is very simple. You have 3 different options here. Now we've included overbought and oversold. Rather than having price an alert when price gets into those areas, the alert will trigger once price actually comes out of them. So for example, just looking at this one, you would have got an alert on, or depending whether you did bar close or once per bar, I should probably explain that as well. So once per bar means that alert's going to trigger as soon as prices conditions happen within the candle. Once per bar close means that the alert's going to wait until the candle closes to confirm. So in this example, you would have got an alert during this day, potentially midday, because you can see price just went straight up. It's quite a bullish candle here. So you would have got an alert during the day. Whereas if you're waiting to once per bar close, you're not going to get the alert until we're at the top here where the candle's closed. So those are the 2 different options, or you can have it on all, which will trigger for both of them. Depending on the type of strategy you want to go for, I personally don't use this overbought, oversold because it's not part of my trading strategy, but you can choose what you would like to do with them. I'm just going to set an alert, for example, we're going to do once per bar close on the overbought, oversold area. Simply toggle this alert on. Okay. Then come over to the indicator name, click these 3 dots, add alert. Now these top boxes are going to be already set onto the right one for you. Expiration will depend on your TradingView subscription. We're going to make another video and go over alerts and more customization features, but simply these should all be on the right. These you can edit however you want, and you can name the alert whatever you want as well. You create the alert. You're going to get a repainting warning, but that's because we're dealing with multi-time frame options. The signals won't actually repaint depending on what you're using here. If you have once per bar on, then you could deal with repainting where the RSI comes out during the day, you get an alert, but by the time the day has actually closed, price actually ends up back in the RSI oversold area. So that will also be something you want to take into consideration when creating your strategy. But that's how you just create an alert. Now to explain the other ones, we've got the interest zone. Simply, this is going to send an alert as soon as we get into an interest zone. So this one we do recommend using once per bar if you're an avid trader, if you trade like throughout the day. If you want to take a bit of a step away, then you'd want to use once per bar close and only get a signal when you actually know we are in the interest zone and a good time to look for a trade. So that's simple enough for that one. Divergences. So once again, these are going to get confirmed on this here. So we recommend using the once per bar close on these, and you would have got a signal where the on the candle close of this triangle here. So it would have been on this candle here. This one wasn't actually particularly good signal. This is just when the bear market started. But just so you can understand where the signals actually come in. This next one would have been a little bit better here. So we had a signal here which ended up bouncing up a few percent. But all of these are in the bear market. So you would have been looking on lower time frame really for bearish signals to enter in shorts on these. So it also had some bearish divergence signals up here, which would have got confirmed on these red triangles here. As soon as that candle closed, that's when the divergence alert would be sent. But I'm going to go a little bit more into divergences. We don't tend to use the RSI by itself. We tend to pair it with the awesome oscillator, but I'll go over that in just a moment. But that should be everything for the RSI. So I'm actually going to move on to the stochastic next. I'm sure you've probably already heard of this one as well, but we've made some slight changes to this. Commonly, people look for crossovers in the oversold and overbought areas, but once again, we don't recommend that as a strategy. From lots of our tests, none of them come out profitable unless you're using some very good confluence. One of the ways we like using it instead is when price enters these overbought and oversold areas is on a higher time frame. So I'm on the 4 hour here. We'd then look on a lower time frame for short entries. This is just signaling that the market is in a strong downtrend. So once this enters here, you'd be looking for short signals on a lower time frame, and you can see that would have given a nice move to the downside. Again here, this one already would have been a little bit late, but on a lower time frame, it would have been confirmed on this candle. It's still a 3.5% move on Bitcoin. Here, uptrending one, strong uptrend gets confirmed on this candle. Be looking for moves into the upside, almost a 10% move throughout. But that's one of the ways we like using them. Another way we like to use the stochastic is similar to the RSI, where we're looking for areas where price spends a few candles, not just one or two, but at least 3 or 4 candles in the oversold or overbought areas. And once it exits, we're looking at that as an entry signal. So for example, here we have a long consolidation period in the oversold area. On this candle close here, we get confirmed that we're out on this candle here. So this is where you'd be looking to enter a long position, especially with the divergence confirmed on the candle before. So you would have entered in a long here, stop below the swing low, preferably using an ATR distance away. Would have had a nice move to the upside. These sorts of trades, when we're in consolidating markets, we use very low risk to reward. We're not trying to catch huge wins here, but that's just us. Your trading style is completely up to you. So that would have been one there. Then you would have been looking at this one here. We spend 3-4 candles in this area, gets confirmed out of it on this close here. Would have been a nice move to the upside. We have a consolidation period in the short area. You would have entered on this close here, stop above this swing high, so you would have been fine here. This one we wouldn't have entered on because it's only one candle in the oversold area, sorry. And then we have another consolidation period. You just sort of can rinse and repeat, but this tends to work better in consolidating markets like this. Uptrending markets, you're going to struggle with these short sides. They're just going to get you stopped out, and likewise in bear markets. But that's just one other way we like using the stochastic. And then obviously we have the divergent signals like most of the oscillators we have here. Now just to explain the settings on these. So you can change the colors of the stochastic lines. You can change what it's all calculated on. These are the standard settings. However, we've made some slight adjustments to how we calculate the stochastic compared to the traditional one. You can also change so in the background here you can see above 50 level is bullish, is a green color, and below is a bearish color. This is because often you'll find, I didn't actually mention, but when stochastic crosses below this 50 point, similar to the RSI where 50 will tend to act as a sort of resistance and pivot point. So this is sort of, once we're below here, you'd be looking for short trades. Once you're above, you're looking for bullish trades. And you can see this nice interaction with the 50 level. Happens quite a lot, especially on higher time frames. But yeah, so you can change the colors of those. If you don't want them to show at all, simply just in the color setting, you can just put the opacity onto 0, or you can make it white. Either or, they both work, and you'll notice both of these will disappear now. Then we've just got the alerts. So options are entering the overbought and oversold area and exiting the overbought and oversold area, as well as the divergence signals. So depending on your trading style, again, you're going to choose once per bar or once per bar close. I'll just show you an example of setting up an alert. I'm going to choose entering the overbought and oversold area. I'm going to turn this alert on. Make sure your RSI alert is off unless you've already preset that for the same time frame. Same idea, 3 dots, add alert, and simply name it what you want. Continue anyway. And then that's it, the alert is set for you. So next we are going to move on to the MACD. Simply just changing the top setting here. I might actually just explain the settings first, so you can change the colors of both of these. The fill line behind is the same color as this second color here, so it's actually the color of this moving average. You can change what it's calculated on. Once again, you've got the standard settings here, however we do calculate them on slightly different settings. We have the extreme colors, so that these are the outer bands you can see. And then we've also got the alert settings, which I'll go over last actually. So MACD, once again, one of the most popular indicators out there after the RSI, I'd say. Simple concept where lots of people use these simple crossovers as entry signals, or divergences as well. So here we had a bullish divergence. This one's a hidden bullish divergence, and then we get an actual bullish divergence where price reacts to nicely. We get another divergence signal here on this high. Would have actually get stopped out if you're trading, unless you, I think that's even past an ATR distance, but you would have potentially entered in on this one instead, which would have been a nice move to the downside. So divergent signals are obviously one simple way of using them. Another way you can use the MACD is around the 0 level, similar concept to the RSI and Stochastic on their 50 levels, where you're looking for crossovers around it. So I personally wouldn't have actually entered in this long here because we're in a downtrending market. So even though you did end up having a nice move to the upside, I'd have waited until we had a crossover. So I would have been looking for a signal around here. We have a crossover, even though it doesn't happen straight away. You would have entered on the close of this candle here, stop above the high, and then we would have had another nice move to the downside. Once again, looking for another crossover, comes up into the 50 level, to the 0 level. I think we have a crossover just on this candle, stop above the high using an ATR distance again. Did have another nice move to the downside, but after this sort of large impulse, you sort of expect a consolidation period, but rather than just constant downtrending market, which is what we have had. So we've had a nice little move there, but still not perfect. I mean, actually, if you stayed in it, it would have been alright, but there's multiple crossovers around the 50 levels here, and they tend to work a lot better, especially if you're following the trend. And if you're unsure about how to use the trend, then you want to refer to our other indicator, the overlay indicator, which we've done another video on, so you can find out some more about that. Another good sign that we're probably entering a tighter range and squeezing, which means that we're going to have a breakout soon, is when these bands start getting really close together like we have here. So you can see the bands keep getting smaller and smaller and smaller until we end up having a breakout. So we end up breaking to the lower side. The crossover happened just above the 0 level, but you would be looking for any other crossover. So potentially this one here, you would have, we've got the confirmed breakdown and the bands start expanding again, we want the next crossover, which would have been here, entered to the short side, and you would have caught this nice move down. See if I could just scroll along and find another example. I have to scroll back a bit. Okay, here we go. We have another example where bands squeeze, break down here. So we can see bands have squeezed here. We break to the downside, ends up coming up, and we're looking for this crossover. This would have been considered a bit more risky because we haven't come up to the 0 level. So you could have potentially entered here, but I personally would have waited a bit and entered on this crossover here instead. After we come up to the 0 level, we're sort of resetting and would have been looking to enter on this close. So it would have been a worse entry, my entry, but I think they're safer in the long run. But that's a simple idea of the MACD squeeze entries as well. Now the final way we like to use the MACD is looking for these crossovers in the extreme areas. Now this works better on much lower time frames for scalping rather than higher time frame moves. For example, if we're just looking at here, we've got a crossover here, especially what you don't want them when the bands are really like this, because if the bands have expanded lots, that suggests that we're in a very strong trend. even though I'm sure if you did know, you would have ended up getting stopped out. So you want it to be more consolidating markets like this. So we have a crossover in the extreme here. So this would have been an entry point, stop below the swing low with an ATR, move to the upside, and then we have a crossover on the other side. So it would have potentially been looking to short here. This one didn't get much downside move. Would have followed it along, potentially entered on this one instead, on this crossover, when we're actually in the extreme bands. So that would have been a nice move to the short side. And again here we have a crossover, stop above the swing high, and you would have caught this nice move to the downside. Bands have expanded a bit, so this would have been a bit riskier. I wouldn't have entered here, but I think this still plays out alright. Yeah, that's another nice crossover to the upside here. But that's a simple concept with the crossovers. I'm now just going to go over, I covered the settings of them, it's just the alerts. So 2 options at the moment. We do plan on trying to add more options for like the squeeze method as well, because that's a much better, much more accurate strategy, we think. But we're just trying to find a way of making sure that the alerts are accurate enough to be able to send to users. But for now, we've got the divergence alerts as well as the extreme crossovers. Simply toggle on the alert, make sure the other ones are turned off. We recommend using once per bar close. Okay, add alert. MACD extreme crossovers, create, continue anyway. And it's as simple as that. That'll do both bullish and bearish crossovers. Next, we have the Awesome Oscillator. Now this one's probably one of the lesser known oscillators out there, but it's an incredibly powerful tool. We particularly like it for its divergence signals, and we tend to use them in confluence with the RSI divergence signals. So if we get an RSI divergence signal, we'd like to check it on the Awesome Oscillator and see if we're also getting the same signal. If not, then we tend to, well, we may still take that RSI divergence trade, but we take it with caution, potentially a closer stop, because it's sort of, if it's only happening on one oscillator, that sort of suggests that it's not a universal thing, less people are going to be trading it. Whereas if it's happening on the Awesome Oscillator as well, that tends to mean that it's happening on lots of different oscillators, which means it's more traded and more likely to be respected. Divergences on the Awesome Oscillator tend to work a lot better on higher time frame, from the 4 hour upwards. We can see here this divergence, some people would still count this. I personally don't trade these. If it reaches the 0 point, and this is what we like to say, it resets here. Same for this one here, even though this one did actually sort of hold the market up, we had a divergence signal between these two because this low was slightly lower than this one. So the fact that there's only a very slight change there, plus it did actually get reset in the middle, we wouldn't have traded that. Whereas this one here, we're in a heavily downtrending market, divergence signal sort of confirms here. This would have been a good short entry to continue to the downside. A couple other things as well. So simply just using them on the crossovers of the 0 point. We don't tend to like trading them, but it's actually kind of useful to know once you're entering a trade, or if you want to see the sort of momentum of the trade, this gives you a very good indication of what it's going like. So for example, if you are in a short position and we're crossing over this 0 point, you sort of know that we're entering into stronger downward momentum, and that keeps growing. You will notice that from some points when these start weakening, it goes into a lighter shaded color. So up here, we have it going bullish, stronger and stronger, then the momentum gets weaker on this candle here. This is from the actual start of the descent. Now some people like to use this weakening momentum signal as a take profit level, which is fair enough. It works for a lot of cases. If you did that here, you would have ended up missing a lot of the downward movement, because you would have taken profit here and here and here before we end up catching a huge big move to the downside. So it works both ways. It works obviously on more consolidating markets, it works a lot better, but you're going to end up missing out a lot more on the trending moves. So those are the other two ways, the crossing of 0 and the weakening momentum. If I just double click onto here and explain the settings. Now you can change the colors of all of these. So we've got a strong momentum, strong bullish, weak bullish momentum, and strong bearish and weak bearish momentum. You can change the sources calculated on. At the moment it's taking the high, low 2, which is literally high plus the low divided by 2 to create an average of the candle. And these are the two fast length and slow length of them. Now to create an alert, make sure you've got the other one switched off. Toggle this one on, choose the alert you want. So we've got the crossing of 0, divergence and weakening momentum options. I'm just going to set it to crossing of 0, once per bar close, onto the 3 dots, add alert. Once again, these top boxes are already on the right one, so I'm just going to go AO, crossing 0, continue anyway. And that's it. Your alert's set for both crossing up and crossing below. Next, we have the WaveTrend indicator. Now, this is actually one of my favorite ones, but you do definitely want to combine it with one of our support and resistance indicators. One I particularly like doing it with is a fair value gap. So I've just pulled this up from our smart money script. If you're unfamiliar with it, check out the other video and it'll be part of our TradingWolf packages. But simply this is just marking up support and resistance areas. These grey boxes are only grey because I've just scrolled back in time so I can try to get some examples for you. But yeah, so just to show you, I've literally just gone back a couple days on Bitcoin, and I'm going to quickly just run through how I would personally trade this and how we like trading it as a group. So this is a downtrending market structure, but market structure actually changes here because we get a new high against this high here, and we have an FEG formed below. So the new high gets confirmed up here. So these FEGs we wouldn't actually look at, but this one hasn't been filled yet. So we'll be potentially watching this FEG for a buy. Price does actually come back down into it perfectly, and we get a crossover. So the wave trend, this is a sort of confirmation that we are actually going to have a bullish move away from it. The crossover gets confirmed on this first green close here. So we'd be looking at this candle here for an entry. Stop loss either below the box, which is actually quite risky. I'd potentially just be watching the wave trend, and if it crosses instantly back over, then I'd exit the trade. Or if I see like a large red candle sort of engulfing the previous green one, I'd also look to get out. But otherwise, this would be your long entry, and we get a nice move to the upside. Now, we still think we're in an uptrending structure here, so we're only looking at buys. These ones where it gets filled in very quickly, we don't really have time to trade with this particular strategy, so we tend to ignore these ones. We're looking for the boxes which get formed over time, and we're looking for pullbacks into them. So here, we're looking at these two boxes. Price goes up and pulls back down. We do have a crossover there, but nope. Comes down, and then we get crossover here. So this one comes slightly after. We only get a gentle tap into the box here. So we wouldn't actually enter the trade until this candle here on this close. But that's still a decent like risk to reward. It's not too bad. And then we get moved to the upside. Still gonna keep an eye on this box. But in the meantime, we've got another bullish box formed here. Price moves away. Do we get an entry? Yeah, crossover confirmed on this candle. This is a brilliant entry here. Nice move to the upside. New box formed. I don't think that one's going to work. It's too soon. But this new box we'll watch. Price comes back down. This one would be slightly riskier because it gets. No, this one still gets confirmed on. Oh yeah, it gets confirmed on the close of this candle. So it's 2 candles after the touch. Slightly riskier, but you just make sure that you're playing a decent risk to reward. So I'd only go 2 to 1. I think you'd be able to write. So it's a 40%. Yeah, 0.8%. So 2 to 1, depending on market structure, depending on volatility. There's lots of things to consider, but I'm just trying to show you some examples. I'm not trying to cherry pick. I'm literally just going for the last couple of days. Here we have another FEG. Price just breaks straight through. Just going to go a bit quicker. This bullish FEG, see if no other examples there. Price ends up just crashing straight through this with no entry because we don't get a wave trend cross. Okay, I think you sort of get the idea. I should have tried to find some bearish examples there, but we just had a bit of an uptrending market for the past, well, in this particular time. This tends to work a lot better on lower time frames. So I tend to do it on 5 and 15 minute time frames, but whatever works for you, works for you. This is just one particular type of trading style we like to do. Spent slightly longer on the wave trend than other indicators, but this is because this is the ones I really like. I'm going to run through the settings. We've obviously got the divergence as well, but I'm not going to explain that because it works just like all the other indicators. So if I go into here, wave trend, you can change the colors of the wave trend lines, and then a lot of options at the moment. We've just got the extreme crossovers. So that's these sort of crossovers in the red and green areas, and divergences. And as per before, once per bar close. And a quick example of setting alert for divergence. That's on. None of the others are on. 3 dots. All on the correct settings already. I'm just going to go wave trend, divergence, continue anyway. And now that's going to give me bullish, bearish, hidden divergences all in the 5 minute time frame here for the wave trend. But yeah, so that is a WaveTrend. Sorry if I try to sort of speed over it, but I just wanted to show my trading strategy which I do with it. So next we have the VWAP histogram. Now this is simply measuring the price as in distance away from the VWAP itself. You'll see when the VWAP goes red or green in this example here. This is suggesting that we're at an extreme level and we should be looking for price to cool off. For looking for a trade idea, we tend to look for the first grey bar after it's been green or red for a while. So we have a grey bar just here. After several green ones in a row, we would normally look to find a crossover just after this, but we already had one a few candles before, so we wouldn't look for a trade here. It goes green again for a couple candles, grey again, still looking for a trade but no crossover, green again, and then grey, and then we have a crossover as well as a divergent signal as well. So we'd be looking for to enter a trade on this candle here because that's when it all gets confirmed, and this is actually one of the lowest candles. So for a reversal strategy, this can be pretty good, but obviously considering it's reversal, and this is after a huge drop, just from the high, just to show you, there's a 17% drop, so you're trying to catch the exact bottom, which is not necessarily a good idea, but it's good for like looking for exits for if you're in a swing position already on the short side. But this would have been an ideal exit here. So that's a crossover, doesn't end up actually moving to the upside, but just ends up consolidating for quite a while. Maybe I'll just look at that bearish example up here. There it is. So we've got a red one just here, and then we get a crossover 2 candles after, which would have been alright. It would have got confirmed on this candle here, so 1.5% away from the high. Does come down a bit, and then we get a liquidation spike above here. So if we're at an ATR distance above, probably would have been alright, but if you're just using the swing high, you would have got stopped out there, unfortunately. But once again, potentially just a take profit idea rather than looking to enter a short position, even though this is finding potential tops and bottoms. So if I just scroll back and just try to find one more example here. Okay, so this one's another one, not perfect top here. We get a few red candles in a row, and we do end up having a crossover, so this would have been an exit point or potential short entry, but we do unfortunately have a couple drives higher where we get some more red warnings. Wouldn't have been able to enter on that one. This one entered 2 candles after, so you might have potentially been looking to enter on that. And then same again here, you would have entered on this one. So you would have got stopped out twice, but if you were using this as a strategy, this would have been find the exact candle you got an entry on. So after getting stopped out on this candle here, because that's when it gets confirmed, so you'd get stopped out here. Next one entry would have been confirmed here. So once again, you would have got stopped out on this candle. So these are just for comparison's sake. That's a 2% stop. And if you caught this entry here, so red VWAP here, crossovers confirmed on this candle. So you would have entered on this candle and stopped just above. But if you look at the swing down, so is there a risk to reward ratio wise? We get a 12% move down after you get stopped out twice for 2% each time. So still, it's something to consider. I personally don't trade this myself, mainly because I don't get a huge amount of signals. But let me just go over the settings and explain some things you can do to play about with it. So first of all, this is calculating the VWAP histogram. We only recommend using the VWAP or daily, just to show you how that changes. Daily is obviously much more responsive, so you will get more signals, but they don't tend to be as strong. As you can see here, we've got some red signals here, but we ended up carrying on and pushing through this move. See if I can find another example. Okay, here, this one wasn't too bad. Lots of green. Would have been looking for an entry here, but you wouldn't have got it because the VWAP already crossed. So you would have entered around here, but once again, this is when it consolidates sideways for a while. But just slight comparison there, you can play about. You can change the sensitivity here, so where it ranges from 1 to 5, where 1 is the lowest. So I've put this on 1. We want to get a lot more signals, but these also are potentially used for take profit levels instead of reversal points, I'd say. So here you can see there was a green one here, but we ended up, after consolidating a little bit, breaking down some more. Same idea here, consolidate a little bit, but then broke down some more. So you may want to play about. If you just want to be really strict with it, you'd put it up to 5, and this is going to reduce the amount of signals you get. We're currently not providing alerts for this, but this is something which we may look to add in the near future. But for now, I'm going to move on to the DPO. The DPO stands for Detrended Price Oscillator and is, I think it's up there with the WaveTrend in my potential favorite indicators that we offer. I tend to use this on much higher time frames, especially just for Bitcoin and Ethereum, and I can actually show you why. As a strategy, it can't get any simpler than this. These are we've customized these slightly, so you're not going to find this anywhere else. But it's a very simple concept where you look to long when we're above zero and you short when we're below zero. I'm actually just going to quickly show you the strategy version of this with backtest results, so you can see how it performs over time. Okay, so I've actually just pulled up, I have a strategy version of this DPO indicator, and it just enters simply, just as I said, when we cross over zero, it enters a long. When we cross below zero, it enters a short. And you can see here, we catch these huge moves, exit them at a decent time, get back in, exit at an alright time, have these sort of little clusters where it's in consolidation and deciding which way the market's going, and then it decides so we're in a short position and catches this huge move. Very simple concept, but worked out very well. Now, this strategy tester has just been going back since about 2018, because that's when it was listed on Binance. But if I go to Bitcoin on Bitstamp, you can see these are pretty crazy results. I'll just show you the properties settings if you're interested in this sort of thing. I've put it onto 100% equity, so this is as risky as you can get, putting your whole balance on the line every time, and that's why the drawdown is as high as it is. It does have fees included, because if you take those off, that does also make quite a big difference. So as you can see, compared to the buy and hold return of Bitcoin, if I just go into the performance summary, you can see buy and hold return is 360,000%. That's pretty crazy statistic as it is, but this is on 3.5 million%. The statistic sort of speaks for itself. And just to show you, this is comparing Bitcoin since it was $4.78. So if you bought Bitcoin at $4.78, and if you followed this strategy, you would have been more profitable with this strategy instead. That's on Bitcoin, and if we go to Ethereum, I'm going to go to the Bitstamp chart again because we've got more data there, and you can see the stats get even more crazy. That's 8.5 million% profit, much higher drawdown, but once again, you don't put your whole balance into this. Buy and hold return of Ethereum in this time is 92,000%, whereas once again, the statistics speak for themselves. And if you're curious, this is since Ethereum was worth $1.20, even went down to 0.75 cent. So obviously Ethereum's currently at $1,200, so pretty crazy statistics, but this is why I love the DPO, and it does have other uses as well. But whenever my friends or family have contacted me and asked for help, once I'm not a financial advisor, but I sort of point them in the direction of this, because if you have something which can beat the buy and hold return of Bitcoin and Ethereum, then I don't think many people are going to complain about that, especially considering you're playing the market both sides, long and short. But yeah, you can also use it for divergence signals as well. I personally don't actually trade them for this, but you can see we do get some nice signals. We did have a bullish divergence down here on the daily time frame, which ended up crashing through, but we got a divergence here where we had a nice bounce, had a bearish divergence across here where we had a nice bounce to the downside, and then a consolidation period after this one. So they are well respected still, but the crossing of the zero is the main feature which I love DPO for. If I just go into the settings, so you can change the color of the DPO line, what it's calculated on. We recommend leaving it on close, but feel free to play about. You've got the positive and negative. This changes the color of the central line, so when the DPO is above zero, it'll go green. When it's below, it'll go red. Now, alert options, we can choose between the divergence and crossing of zero. So I'm just going to create one of these as an example. So I'm going crossing of zero and once per bar close, 3 dots, add alert, DPO crossing zero, and then that's going to send me alerts for both crossing up and crossing below. But that's everything from the DPO. Now finally we're going to move on to the Zig Zag pivot points. Now this is going to be a little bit more complicated if you're new to trading, but you can always read more about it in our documentation or ask questions in our Discord group. So the main purpose for this is to analyze historical data in order to observe cycles in the market's movement. You want to check if there's a common rhythm or beat in the underlying asset, and to check that you're looking for recurring patterns in the numbers. For example, if you often see the same measured distance, you can conclude that there is a major dominant cycle in this market. Also, you can find harmonic relations in the numbers as well. So if we've got an example just here, so we've got 80 here, 85, 112, 48, 44, 20. Then this breaks the pattern here, there's 33. So there's two different patterns here. There's a harmonic patterns where they're all sort of near multiples of 40. You can never expect them to be exact, but this is relatively close. So you'd say this is a dominant cycle pattern. There's several different ways of using these really, but one way is when numbers are increasing in distance. This is showing that we're having a dominant cycle in the uptrend. So 86, 85, they're about the same, so you would ignore those. But when it goes up to 112, that either suggests that we're weakening momentum, but if we're not really in a trend yet, then you would suggest that actually we're still gaining momentum. When we have this descending pattern here, we have 112, 48, 44. These are all descending numbers, but still like multiples of each other. So the 48 and 44, then it halves down to 20. That sort of suggests more of a parabolic style run. And then we break the pattern with 33 here. Now this just shows weakening momentum because it's taking longer to get to that point. Plus you can obviously see on the chart it's not carrying on the parabolic run. So you would suggest that this is changing market structure now. And that is what happens exactly. This is just one example, but you want to read more into harmonic data. I'm not going to go into it now because it is quite complex and it could be its own video. But yeah, I'll just explain the settings. So you have the option to change the colors here. So green is obviously for the positive line, red for the negative line. Black text, if you on a dark background, you may want to change this to white so it's actually visible. 15 is the length which is determining what confirms a pivot high and a pivot low. So if you want to be more responsive, you might find this on lower time frames. I don't recommend it for higher time frames. You might want to drop it down to 10 or 5. I'll leave on 15 for now. You can enable and disable these labels. And also, if you have it on trended here instead of detrended, this is just going to follow the market structure. So you can see here, as price increases, so does this. So you don't actually even have to look at a chart. You could simply make a trading program just based off of this alone. But yeah, please read more in our documentation or ask us as many questions as you need. That is everything in the oscillator script. But I hope you enjoyed, and yeah, leave us any questions you have. Many thanks. Bust this.